Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. Today, we welcome Garrett McClure. Going from zero to over 3 million in revenue is a dream of many people who are trying to grow through acquisitions or to even start their first agency. Garrett did in about 6 months. He followed the process. He used his career experience coming from the agency world and the advertising world and started programmatic M&A for himself. He walks us through this self-funded search, the conversations, the playbooks, all the tools and support he got along the way, and the ups and downs. Garrett is a true role model for someone who shows up and puts in the work. I consider him a friend. He's a student of the Agency M&A Mastery course, and I appreciate him for coming on and sharing the journey of his first acquisitions. So let's dive in. All right. Thank you for joining me.
Hey, Peter, it's a pleasure. Looking forward to exploring some of my experience and see if there's some wisdom in here for everybody listening.
Indeed, there is. You did something that many of the listeners or viewers dream about, and that is going out and buying a company, not just to invest in and not just to put your time and energy into, but as then a mechanism of growth moving forward, doing programmatic M&A. How are you even qualified to do that? How did your career develop to this? You obviously came from investment banking, private equity, to accomplish this outcome, as many believe. So give us the background. And then again, what category did you buy into? What was interesting? Take us down that journey with you.
Sure. So I think what makes me qualified to have bought a business is the fact that I bought a business. I think for first and foremost, uh, if what's interesting to me, if I was listening to this podcast a year ago, so I'm kind of doing this in the theme of what advice would I like to give to myself? And if I would have known a year ago that the qualifications that make you good at buying a business or that you have the chops or the confidence or you're worthy of it, it's the fact that you've done it. And I think that's a theme that kind of goes through my whole life, which yeah, I grew up on a small farm in Kansas, and I learned that if you want to do something, you learn how to do it and you do it. Very much a go-getter. So that's my top line answer, a little bit in jest, but also in all frankness. Um, the the other like qualifications, what made me qualified to buy a business, to be a strategic investor, to spin up a holding company, like all of these words that were aspirational at best a year ago, um, was looking back at my past experience and saying, what am I really good at and what can I use? So let me take a step back. What I was looking to do, Peter, is really build up some wealth and some value in my career. And I was taking a look at what am I really good at? What do I have a lot of experience at? And what could I accelerate? As far as bringing value, and a couple of things came through that. One, I love coaching, I love mentoring, I love consulting. I love the project nature of that, where we look at a problem, we find a solution, and then when it becomes steady state, I like to move on, right? So I really like that, uh, finding problems and solutions, then moving on and continue to do that. And so when I look at my ability to do that and create significant value, I looked at my career in advertising and marketing media, and I've been doing that for 2 decades. I did it at one of the largest and one of the biggest advertising and content sites in the world, Yahoo, back in the search wars. And then I went to a private ad tech firm, a company called Basis. They were called Centro back in the day. And I thought, while I was burnt out when I left that industry, it's also where most of my experience is. It's where my connections are, the people that I grew up with in that dot-com bubble. Are now CEOs, C-suite investors. I have a lot of great connections there. And so I was looking for a way to unlock that value. Um, And I just so happened to book a call with one of your partners and friends, Tom Shipley, who was my one of my very first employers when I went to get my master's degree. I decided I was going to be a CEO back then. I knew I was going to run companies when I went to get that master's, and I said, "Hey, I want to work for another CEO. I want to learn how do you become a CEO? What does that look like? What does that feel like?" And so that's when I joined up with Tom, and Tom and you were doing this M&A thing. And I thought, well, hell, let me come to one of these events and see what this is all about. And I fell in love with it. Uh, Little did I know it actually is a ton of fun to talk to business owners and understand their stories and understand their motivations. Um, that's a little
Yeah,
bit of how I got here. Let me pause there and see if I'm on the right track for you.
yeah, and it's a wonderful item to emphasize. You you took the blood, sweat, and years of being in a career, exhausted from the day-to-day grind of that career, and said, okay, well, instead of throwing all that experience by the wayside, uh, what value can I create in the world? And when you start evaluating what's happening in the world in regards to businesses, the transition of wealth, silver tsunami, companies constantly looking for good partners, looking to transact, scale up beyond what they've currently been able to get to, they need good partners who can invest in the future opportunity of that company. And the event you're referring to, we talk about programmatic M&A and business buying, going out and my shtick, solve all business problems with M&A.
Right.
And you were looking at how can I expand the company that you had currently engaged with. So it might be helpful. You have more than one agency today. So how did you get from admin professional to, okay, now I'm going to go out and find a company to add value, invest in, and acquire? Like, give us that context that led to that genesis.
Awesome. I'd be happy to. So I left the advertising industry. I don't even remember what year now. It's been a minute. I was exhausted. I was burnt out. I decided to take a break. I did a whole bunch of random things. I worked at a nonprofit. I consulted. I was doing mentorship. I was a co-founder of a couple orgs. Like, check out my LinkedIn, and you'll see this like wandery path of like 5 or 10 years there. And I ended up one of my I went through a divorce. I needed a roommate, and a friend of mine moved in. Turned out he owned a PR firm. And so this roommate became a really good friend. Roommate then became a consulting client, then was a coaching client. Then we ended up doing some, work for equity. And I ended up, when unbeknownst to me, doing doing a sort of an acquisition
Yep.
through works and some investment, and I ended up owning a PR firm. And I thought, okay, I'm I'm back owning the stage in the agency world, and I had finally had to make a decision. I was doing so many different things, nothing was getting 100% of my time, and nothing was really I wasn't hitting anything out of the park, and that's not comfortable for me. So I made a decision. I'm like, I'm going to go all in the agency world. I'm going to go all in this PR firm. We wrote a book. We were doing all these things, and we're still having some struggles. And that's when I found this agency M&A event. And I went there because I was trying to solve the problem. How do I grow this agency? I'd been in the industry for 20 plus years, but I hadn't been on the ground in the trenches for the past few. So I
And
went to
in
this.
a tiny agency at that, right? You're used to a little bit more established organizations, resources, and kind of the 0 to 1, let's grow together and approach the world is just a paradigm shift to that. And our early
Yeah, yeah, for
discussion
sure.
was like, do you make a decision and kind of grow that, or are there other opportunities out there that could expand your resource and kind of create a more holding company approach to businesses and assets versus just I'm going to be in a startup type environment? And you went the direction of M&A and talking to businesses. So describe how we got you to drink the Kool-Aid.
Honestly, it was that phrase that you can solve all problems through M&A. And I thought, this is great. One of the things that I absolutely did not want to do was I did not want to take a $250,000 a year business and grow it 10 or 30 or 40% year over year over year to eventually get it to a place where we could do something. And thought, I thought I needed to have $1 million or $2 million agency or business before I could start doing deals. I thought I needed to be in a place where I had X business and this. I thought I needed to be somewhere that I wasn't in order to start doing what I'm doing now. And that was a misconception. The misconception was that I guess I realized the experience I had, my desire, and for anybody listening, if you're willing to put in the work, you can do anything you want if you'll just start doing the work. And so I started doing that, and I realized that yes, we will continue to grow this agency organically, but we're also adding that second engine. We use that a lot where there's two engines on a plane. One is organic growth, the other is, an acquisition. Um, and you can add on people, you can add on services, you can add on just plain EBITDA or revenue to your business. And I'm like, great, I can do that. Like I can do that. I can set up, I can get people, I can get on conversations. I love storytelling. I love that. I thought I'll try that. And so in the last 12 months, I have
But
talked to
before you jump to that,
yeah,
I wanna walk people through this because you're right. You can accomplish it if you put in the work. And for goodness sakes, you put in the work. And so we sit in two sides of the M&A camp. One is proprietary deal sourcing, so kind of entrepreneurship through acquisitions, where you're actively reaching out to business owners and having discussions about where they are and how's it going and whether or not they're looking for partnerships or looking to sell. And then there's the brokerage side, going to the marketplaces, going to the brokers in the industry, because you're still focused on agencies and using all of your professional experience to enrich the opportunities that you're looking at. And you're entertaining both. So give the individual watching this an idea of the scope of the commitment of the first few months, and yeah, give them as if they're peeking over your shoulder every day, seeing what kind of sims and what kind of people you were interacting with.
awesome. So I guess if you're listening to this, I realize a lot of people who start doing this, it's because you're probably a CEO or you're a partner and you have another full-time job and probably you have several. Um, I was lucky in the sense that I had a job, but I was looking for I'm going to do something full-time to grow this business. And I decided M&A and deals was the way I was going to do it. And I was lucky to have a business partner that supported us in that, where he would run the business and sales, and I would be able to go on this venture of M&A. So you're correct, Peter. I started with one. I listened to your course. So Peter, thank you for putting together such a great step-by-step course of like do this and then this and then this and then this. And when I started all of this, I literally just did what you told me. I I thought, let me just do what I'm told, and then I can try to make it better or different or whatever. But I followed the steps. I set up an outbound campaign. I was using Apollo. I wrote email sequences. I warmed up email inboxes, and I started sending emails to hundreds and thousands of agency owners, telling my story. Hey, I have this vision. This is what I'm doing. I'm looking for people with this criteria. If have 3 to 10 employees and you're looking to partner or grow through acquisition, or you want some different outcome in your business, let's chat. Let's hop on a quick call. And I started getting a bunch of booked calls and talking to people. And through that cold outreach is where this latest acquisition came from. So I bought a company called Born and Bred brand, and I reached out to them. I found them through this cold outreach, and that's where I sourced this deal. It wasn't until much later that I started looking at the brokers and looking at those deals. Because one other pro tip or hack that I think is important is do one thing at a time. Right? It was too much for me to let me look at all these brokers and listings and like all these sources. Let me just get good at the intro call.
Yep.
And I think this is one of your advices too, Peter, was have 20 calls as quickly as possible. Just have calls. And so I was from 20 years in the industry, I've worked with hundreds and thousands of agencies. I actually helped create a bunch of digital agencies back in the day at Yahoo, in our partner program. So I reached out to a whole bunch of them. And I'm like, let's have a chat. Let's see how this lands. Um,
Do you
and through
remember
those
do you remember how you
conversations,
felt in those first few calls?
oh my God, terrified. Absolutely, like imposter syndrome came up. Like, is this, are they going to believe me? Am I able to do this stuff? Like, there was so much internal chatter and noise. Um, but the way I got through it is I had a script. Again, I followed your advice. I wrote a script, and for the first like 4 or 5 calls, I just read the script. And then pretty soon I'm able to take these calls at coffee shops, in the car, like in the backyard. You just get good at this stuff. And what I found is that I really liked it. And so it became a lot of fun. Even telling this story here to you on this podcast, this has been a great adventure. And uh yeah, I'll probably pause there.
Yeah. To give some numbers on that. So you built the outbound campaign. You generated lists of agencies that at a surface level fit your criteria. You reached out to them. They responded back and said, yes, let's have a chat. And you took calls with them and
Yeah.
you kind of shared your story. What did those numbers look like, if you remember? How many conversations were you having? And then ultimately, maybe get ahead a bit, how many conversations did it take before you went, oh, I actually have a deal I really love and I'm going to pay attention to. So let's turn it down a bit.
Yeah. I think it honestly happened fast. Um, I was getting a 30-40% open rate. I was getting a 5-6% reply rate to these cold outreach emails. And the way I started just in Southern California, and then I did all of California, and then I did all of North America. So I didn't, again, my meter did that. I started small because I honestly had no idea what was going to happen. Um, but it happened pretty fast. I think I'm going to say, Peter, I think I did those 20 calls in the first 60 days.
I thought,
Um,
yeah, you knocked them out very quickly.
it was fast. And I think the advice even was like 5 or 10, and I did like 20 or whatever the number was. I did double that amount in half the time that you prescribed, because that's just who I am. I'm an overachiever. Um to my
And
it's
just
a
and just set expectation for every first call you have. If it's a positive, like the general statement is, life's too short to spend time with people you don't like. And so
Mhm.
it's really about that first call. Do you like them? Is there opportunity? Is there a discussion? Is it pretty
Yeah.
free flowing? And you actually get along well with a lot of people. So that's a problem when you have an outbound engine, because the first call means you're going to have a second call and you still have other first calls. So you are just building this like volume of conversations and stories and interactions and discovery discussions, and doing really well. Like I remember your updates and just such positive. And you're in. Although you were nervous in the first few, yeah, it became something I thought I was going to be concerned that it was an addiction. You were that into the conversations.
Yeah, what's interesting about where I was too, for everybody listening, the other nuance to this, and it's really important, is I didn't have a focus.
Yeah.
So while I had this PR firm, we we weren't necessarily sure where we were going, and it's a very small firm. So it's not like we're a $10 million agency in healthcare that's looking, in pharma with FDA. We need like none of that. I was at a, hey, I'm looking for somebody who wants to do a deal, right? Because
Yeah.
what I was looking for specifically, I was looking for an agency to come on and be my platform. So I was clear on this. What I wanted to acquire was great talent. I wanted a great CEO, a great head of sales, and a great CFO or operational leader. I
And
wanted the
brand. And you wanted that was a nice to have, but it was on your list that you wanted something that could be the brand of your future acquisitions.
absolutely, yeah. Um, so with that package put together, then once that happens, then there's a stake in the sand. And then with that acquisition done, that holding company, that platform, use the word that platform in place, then I have a very defined buy box.
Yeah.
Up until then, it was just do you want to chat? Let's like, so I'm taking calls with anybody that would have a call with me, and I'm open to all kinds of things. And so I'm literally chasing everything down. It's exhausting. It's as much as it is exciting. And for me, I'm looking to get something done so I can build wealth, and this is my career. And I'm looking to build this business. So I had some urgency around finding this unknown, undefined future partner, talking to all these people. Um, and I'm also not sure, like, how are we going to structure the deal? How are we going to finance the deal? All these downstream. This is one tip too, and one thing I did is I forced myself to kind of what do you call that when you isolate or um,
Siloed.
yeah,
You,
silo. Great word. Yeah.
yeah.
I forced myself to silo that stuff and be like, okay, don't look too far in the future because I'm going to get overwhelmed. If I would have, you know, I'm very strategic, so I like to see where I'm going and kind of be able to plan that. I forced myself not to do that. I'm like, have 20 conversations and then look at the next step. Get two or three interested parties, and then figure out what is an LOI. What does that mean? What do you need to do? Okay, great. Like I just kept doing it one bite at a time, so I didn't get overwhelmed with the process.
And also, you didn't get paralyzed, right,
Yeah,
through analysis
yeah,
and concerned about the things you don't know yet, right? It's very important not to try to cross the chasm till you get to the bridge. A lot of these things will be revealed to you as you go through the steps and you put in the work. But you also went through and invest in the education. You spent time learning,
yeah.
asking questions, and you did enough prep to where you had a macro view, but you didn't have all the micro details. And that is a very important lesson. And I share your example quite frequently when I say um, what when it boils down to it, the effort is rewarded when you do this activity.
Mhm.
Um, when you're looking to buy a business or you're looking to grow through acquisitions, if you don't come from private equity, you haven't been involved on buy side transactions, even if you were part of someone that was acquired, it's different when you're leading it and you're the alpha, you're the primary, and it's very common for people to want to know all things to take that first step, and it's more kudos to you, and a lot to show the energy and the strength that you had, that you just forged ahead. And I remember, I can't remember the exact date, but I do remember that when it was like this physical change in your
Mm,
demeanor, um, because you also made friends. Like you connected with a lot of these businesses and shared stories, and it became a part of this version of you that didn't exist when I first met you. Um, and that was really wonderful to see.
yeah, Peter, you're gonna make this emotional. But that is one other thing that happens through this process is I'd leaving advertising, leaving this career, kind of being very wandery and unfocused, and then COVID-19 happening, where really everything got upended. I actually I stopped all my consulting, and I went and I dove in head deep to become a master certified coach in NLP and all kinds of other modalities, and I built a practice there. Um, and I kind of lost my identity a little bit. I'm like, am I an executive? Am I a coach? Like, who or what am I? And when that happened, if anybody's listening, I'm sure there's moments, and I think for a lot of us, the pandemic forced us to really reevaluate what's important, what matters most, and coming back and realizing that I do have this drive. I want to do stuff. I'd lost a lot of my confidence. I'd lost a lot of my confidence. I'd lost a lot of my focus. And so this gave me a chance to focus. And I really want to thank you and the crew for helping me rediscover that. And it's also super valuable. I would not have been able to do this. Like, yeah, I'm committed and aggressive and all that stuff, but I also did surround myself with an incredible group of mentors and people. And I invested a very significant amount of cash and time into this group of people and this mastermind, if you want to call it that, mastermind group education, et cetera.
Yeah.
Um, to accelerate what I wanted to do. And I think the other phrase that you've used in these was like, if you invest in a group, invest. Like I've spent lots of money on this now, and it's always paid off. You will kind of time travel. You will move yourself 5 years ahead of where you could go organically by renting, leasing other people's experience. And it,
Stealing even, I mean, I thought like copy paste, use it. Yeah, it's important, right? You can compress time.
That's it. Yeah, compressed time. And it's so important to keep remembering it's about who, not what or how. So, like, you just, okay, I know I'm going to have this problem. Great. This attorney will help me solve all these things. Oh, I'm going to have this issue. Great. This resource, this connection, and this mastermind. Oh, this Slack channel over here with these people. Like, I have so many resources now to reach out across almost any issue that comes up. Um, but I don't need to know how to solve it. All I need to know is who do I reach out to? What's the resource I employ to make that happen? And I gained a lot of that, most of that from you and the group that you put together. So
Yeah.
yeah, that was absolutely from a
Well, thank
personal perspective. I want to say one other thing to the listeners too. It, a kind of an analogy is think about if you've ever bought a house. I'm assuming most people on here have bought a house or done some sort of large transaction. That's typically a person's largest transaction is buying a house. And it's pretty scary and it's a big deal. When you buy a business, take it times like 100 because at least with the house, you have a physical asset. There's this thing and it's got a big market and it's very sustain like it's reliable and it's predictable. Buying a business, there's so many other factors and for me what going through that fire changes you. It changes you at a fundamental
at
level
your core. Yeah.
absolutely at my core, right? And I went from being an entrepreneur who co-founded some businesses, I have equity and all these different things to I'm an owner and I have these I now look at things as assets and it I imagine it's like being an astronaut and going and actually seeing Earth from above. Like that changes your perspective on life. This to me is that profound. Going through an acquisition, a transaction is that profound.
Yeah, it's meaningful. Uh, well, let's go back to the deal. So you spoke to I think it was close to 40 to 70 businesses in variety of different owners. You found this business that you now own quite quickly in the process. You ran the playbook that we preach around programmatic M&A. So systematically going through the steps to make sure you have a professional process when interacting with a seller in a proprietary way. So they're not prepared. They didn't expect,
Yep.
they didn't have everything ready for you day one.
They had nothing
Uh,
ready for me.
so let's go into this conversation around this deal. So you've born and bred. Give us the specific. Let's narrow down on this. Do you remember when you started talking with them and kind of how long it took to get to the various stages?
I do. It actually was pretty quick. Have the dates. No, well, the exact dates don't really matter. But I know that I talked to the CEO and co-founder George. He's the one that replied to my email. He actually still has the email. And when we closed the deal and announced it to the team, he actually made a deck and we showed some of these different emails. And George, I actually invited George to an M&A conference as
Which
a
was
piece of as an education piece for him to be like, listen, if you're at all unclear or unsure and certain about how this works, come to this. Here are the people I work with. This is what we're doing, and that was part of what closed the deal. But it actually went pretty quickly. So I know we had our initial conversation. I did the intro call, I did the deep dive call. We started getting numbers. And I think it was probably 6 months before we had the deal on the table and we moved into due diligence and close. I think we closed the deal about 9 months after the first contact.
yeah. And your first contact was only about a month and a half to 2 months from just starting doing this.
Yeah. Yep, exactly.
So
Yep.
so from I'm not doing this at all. I've never done this before to now I own a, what was the revenue of the business?
3.5 million.
So you went from 0 to 3.5 million in, you know, roughly almost under a year.
Absolutely, yeah. It would have been, I mean, honestly, looking at the calendar, it was had to be December, January, February, March, April. It must have been under 6 months. I have a very, I'm extending the timeline here, but yeah, it was shorter than that. Um, it's
Yeah.
been under 9 months before, from not knowing what M&A is to owning this business has been under, yeah, under around 9 to 10 months. Yeah.
Yeah. And for those uh, listening where that sounds fast, uh, in a self-funded search, which is you're going out and looking for a business to buy, the range can be 12 to 24 months, but that doesn't also include uh, the amount of conversations you have, whether or not you have another job on the side. This doesn't include how far you got with other offers, right? Oftentimes you can make multiple offers on various businesses, get to different false starts with them, and then continue with others. So it takes effort. But I typically say, what's the highest and best use of your time in the current business you're running now? Should demonstrate to me where you can spend 6 to 9 months and generate 3.5 million in new revenue in your business. And the vast majority cannot do that through organic. The incremental, the 10 to 20 to 30%, even 40% growth year over year does not live up to the return on invested capital that an acquisition will bring. And so you did that in a short amount of time. Run us through a little bit of the process. So you made an offer, they accepted the LOI, and you started due diligence. What was due diligence like for them, the team over at Born and Bred, and what was it like for you going through the weeds and getting to know these owners?
Yeah, so a quick nuance to that. Uh, Met, discussed, it was all great, put together the, talked to the LOI. We sure we all had great understanding what the deal terms were, price, structure, all of that. Sent over the LOI, was accepted. We got we got a little bit further, maybe a week and a half later, then all of a sudden the LOI was unaccepted. Because one of the business partners finally was looking at some of the terms and was like uneasy with it. And I think you probably talked about this on past episodes, but his fiance's father is an attorney who is not in the M&A space, and that family friend, who was super helpful, came in and literally blew the whole deal up and said, "This is terrible. The terms are terrible. You're not. Where's your cash down?" Because and he does M&A, but for like malls and physical assets and real estate. And so I had to go back and do a bunch of education around how do these deals work when you don't have a lot of assets. And so we had a little bump at that LOI stage, which ironically, I heard this could happen, and it happened like to a textbook, to the way you explained it.
Yeah,
Um,
we warn a lot of people within variety of different industry categories, especially in
mhm,
professional services, white collar or creative industries. Um, Domain expertise is vital for deals to typically get over the line.
yeah.
So the accountants, the lawyers, the buyers. If you're not from the industry, it's sometimes challenging to digest these types of businesses because a lot of the value is client contracts. And then the personnel, especially in this post-COVID world, they're remote. And even if they're not remote, they come in office, they leave on Friday and you hope they come back on Monday. So there's not a lot of things that you can collateralize to do a lot of traditional conventional debt financing, or you have to come off the balance sheet for. And it's just not a really consistent structure of deals in our space. Earnouts, performance, shared uncertainty around the transition of clients is common. You also have seller finance as a very common component and a significant component in deals, especially for
Mhm.
the lower middle and the smaller businesses. And very few SBA lenders lend to this service type. And so there's just not a lot of options for these smaller businesses in profit to get really strong financing terms. And when they find a good strategic buyer that is coming in from a more creative approach of the acquisition, adding value into the acquisition. So just to clarify for everyone who's listening, you didn't buy 100% of the business.
Yeah.
So let's give some parameters. You bought a certain percent, and then you were stepping into that company to facilitate a contribution and role, but also a vision and where it could go, right?
Yeah, the great point, Peter. So again, back to my initial intention was to acquire a platform and a leadership team and people that would stick around and build the business. Because what I didn't want to do is I'm not looking to buy a business and be the operator. I don't
You're
want
not
to
buying
step
a job. Yeah, you weren't
I don't
buying
want
a
to buy a
job.
job. I don't want to be the CEO. That happens. That's easy. It's easy for that to happen, especially in these smaller service-based businesses, founder-led sales, founder-led fulfillment, all of that stuff. So that was one of the reasons when we did the deal, the structure was I was buying 51% and they were retaining 49%. So that there was significant incentive to remain with the business for the next bite of the apple or for the next transaction. So I would acquire 51% and step in with the visionary side, bring a lot, up level a lot of the operations, systems, and serve as the M&A officer, right? Come with this vision of like, you continue growing and doing what you're good at on this side of the business and grow it, 10, 20, whatever percent we can grow a year. I will continue to go and bring on other additional acquisitions, bolt-ons or mergers or complements or whatever that looks like into the organization, and we'll grow this to, our goal is 25 to 30 million top line with a $5 million EBITDA in the next 3 to 5 years. So that was our North Star, and that's my contribution with having a great execution team that also serves as the future integration lead as well. So that CEO, George, is the kind of the linchpin in that, which ensures that I have strong operational capabilities, great HR, great financial systems, great CFO that becomes something it's now easy to bolt on and add on, and I can continue to do acquisitions and have conversations around growth that way. Yeah.
Yeah. So you had this LOI, you got initial pushback, you worked through that.
Hmm.
You got into due diligence.
Yeah.
We have templates and things that make it easier, of course, because a lot of things in M&A are standard forms, right? Purchase agreements are standard forms. LOIs are standard forms. The checklist of what you should be asking of a business at certain sizes, these are available resources, but then you also have to go a step further. You have to spend time together. So walk us through due diligence a little bit.
Yeah, and I was
Share what
lucky.
that was like.
Sure, yeah, and I'm lucky because geographically, one co-founder was in Los Angeles, the other is up in San Francisco, and I'm here in Palm Springs. So we were able to spend a couple of, we had, I think George very early on, actually sent him an audit. You have a document in your course, which is an audit where you send this to the potential seller for them to fill out. It's an exhaustive like overview, every little detail of the business. What's your motivation? How did you get into this? What are your just tons of questions, and they fill it out. And it does a couple of things. One, it gives you an insight into the business, a deep insight into the business, but it also lets you know how motivated they are to do this deal because it's a lot of work. And then I also get to know how prepared they are. So George filled it out. He drove out to Palm Springs, had lunch with me here to review this audit. And we got along great. And to your point, one of the most important things to me is do we have a good culture and vision? Are we going to get along? Do we want to spend a lot of time together? Because we're going to do a lot of stuff together. And this this deal is probably, things are going to be great when we do a deal and you're excited and you pop the champagne. There are a lot of hard times, challenging times down the road. And so it's like it's like getting married. I definitely, making the analogy that this is like a long-term committed relationship. So we kicked it off with a series of in-person, meals, meeting Kyle, the co-founder. And then when we got into due diligence, I literally, again, I followed the steps. I used your forms and templates and set up a data room, and they submitted all the information over. And this was also where I started reaching out for more help, because it's a lot to reevaluate. There's so many things, and for this being my first time going through this formally, it's overwhelming.
And
And
alone, let's be clear. Like if you already run an organization and have an agency and you're going out and buying, maybe you can pull in some internal resources, an executive assistant, admin to help you with this, your own accounting person. But a lot of this was you alone at the front end of this transaction, driving it forward, and you needed help. There was a lot of things to look at on the commercial side, and then you have the legal side, and also the accounting and finance.
yeah, and it's much different too. Like I'll just, and like one caveat is I run the finances for my family business. We have a $2.5 million FedEx contracting firm that we grew through M&A. The other small agency that I acquired through, work for hire or work for equity. And then there's been a number of other businesses that I, you know, co-founded or had equity positions in, or et cetera. That helps you, but this is such a different beast when you have to look at a $3 to $5 million organization, and understand the health of it, across so many different factors, because you're not just working there, you're literally investing money in this business to buy it. And so I quickly started to reach out and use the people in the group, the people in the mastermind, got a great attorney, and that through that great attorney, also got access to great tax advisors. I reached out to others, CFOs, to get some advice on some of the numbers. But you're right, Peter. A lot of this was me looking at the numbers. Do I believe did what they tell me up front match what I'm seeing in the numbers? And that's a lot of what I did was, so do I still have high trust in what they're telling me has happened? And do I have high trust in what they tell me is going to happen in the future? That's probably the linchpin of how I did this deal. Of course, relying on some of these other professionals, but I really looked at the integrity of, do we believe we're going to have a better future together? Um,
And it's
yeah.
important to realize that you don't have to know it all, right? The who, not how. Knowing who to call for an area that you need insights, need counsel on. Shout out to your attorney, my attorney,
Yeah.
uh, Joan Sprouse. Uh, Robin Sears is a beast in M&A and knows this space. She did 60 transactions last year alone. A third of that was in the agency space. A lot of those were mine as well.
Mhm.
And so when you look at this ecosystem, it's about having people you can lean on when you have questions, when the thing pops up that you didn't anticipate. And deals aren't easy; they're messy. Maybe some of the stuff, because it's also a relatively still new deal, is in progress. But it gives the listener, like, how messy was it?
Um, that's a great question. It Where I'm still figuring that out, how messy it was. It was I got great partners in the deal. The messiness was, yeah. Let me take a step back. It got really messy. One of the things I wish I would have known. I wish I would have experienced this before. I think the only way to learn this is to experience it. It is extremely distracting to go through a transaction. And so this organization was doing $200,000, $300,000 a month in revenue. The month we closed, we dropped to 50,000 in revenue. And it was that kind of experience for the past several months after the transaction closed. You just can't underestimate the amount of energy, emotional distraction that comes from selling your business when you're a founder, like these two co-founders, this is their business they built for the past 6 years, and now they're selling it. And it's probably the biggest, it might be the biggest deal that has ever happened to them in their life. And so there was a high amount of distraction. And I think I underestimated that. So now as an agency owner, it's another thing that I am very serious about protecting my team from all of this work that I'm doing as I continue to do in the M&A world to look at future transactions. I'm very careful about bringing ideas and exciting things and like, look at this shiny thing to even anybody else in the organization, because I don't want to distract them from keeping the business steady and growing it.
Yeah,
I don't
that's
know if that
it.
really answered your question, Peter, but I maybe we'll get into some specifics around some of the downstream impacts and turn of events on the next episode, on the next on a follow-up.
Yeah, yeah, give you time to make progress on all of these initiatives that you've been rolling out and give an update back.
Yeah.
So we're still in the deal, narratively speaking, right? And so as you were alluding to, is a big distraction for the firm, so much so that ended up causing a reduction in performance of revenue in the company
Mhm.
right after. And this is a key lesson. This happens in transactions for earnouts. This happens in a lot of the seductive fun that is getting a deal done versus let's continue to drive revenue forward and fit this in and ultimately have more value creation as a consequence. But you were doing due diligence, spending a lot of time. They were gathering information. You got the purchase agreement in place. Explain a little bit about that. That was your first real experience of a more a comprehensive acquisition and a
Mhm.
corporate strategy. What was your takeaways and learnings from that?
Yeah, one other, you jogged my memory. When we were going through due diligence, I would say one thing to really focus on, look at your disclosures. Really focus on the disclosures and see what is in there. One of the things that I ended up doing late in the game was there was a like a $50,000 legal debt from somebody that the agency was sponsoring to come over from the UK. There was another like I think 50,000 in credit card debt that wasn't on the initial disclosures. And so when that stuff finally comes over, sometimes later in the game, then when you request in due diligence, you have to be like, oh, what are we going to do with this money? Because that debt, what I ended up doing was doing a stock purchase, a managed an interest purchase rather than an asset purchase. So that meant that I'm also taking all the liabilities. And because I was taking these liabilities, we ended up reducing the purchase price to accommodate some of these things that would not go away in the sale. If we would have been doing more of a traditional asset purchase, that would have been taken care of in the proceeds, but it was not. So um, I would say that was an important lesson is you do have a lot of leverage and you can change some things and what I did early on that I think led to most of my success was built a really great relationship with the seller and get on the phone early and often with the people you're going to buy. Um, Even for the smallest things. Yes, you can send an email to confirm it, but hop on the phone, get on the text, like create that relationship where you're talking daily,
Yeah.
right? You want to be friends and like don't let your attorney or attorneys are going to do their job, but you're the one doing the deal. They're helping you do the deal. So I think that's probably one of my critical learnings is create a great relationship. And if you don't have a great relationship with the seller, I would really reconsider, is this the right deal for you?
Yeah. A transaction is a bonding agent between people. You will never forget this person. It will be forever seared within your brain and theirs. So
Hmm.
um, you were talking about having an open dialogue, rapport. And when you're dealing with young professionals, because your partners are young,
Yep. Yep.
who've never sold a business before, who aren't going through a formal process, so they weren't fully prepared to disclose everything and have it all organized. It did take a while for the stuff to come out. And it wasn't like they were being secretive. It was just within the course of the business, sharing information and you having time to digest it and organize it and review it for you to feel comfortable with the parameters of the deal. Um, And kudos for them for being collaborators rather than just negotiators. Saying,
Yeah.
okay, how can we make this happen? How are we going to handle that? And let's resolve these questions that we have. So
Yeah.
this big comprehensive document shows up, though. That's intimidating. Um, how involved for someone who's not purchased a company before? What did that look like, and what were your lessons learned?
What was interesting, so the document I sent over really what was the template from Peter. Um, and so it had, I don't know, 150 things, 150 line items of things broken out into different areas of the business, like finance, sales, IT, legal, et cetera, et cetera. And inside those was like, so let's say, yeah, operations was one, and then you had one A, one B, one C, one D. What was interesting is they actually organized all of their things to me using those numbers. They titled the assets with those numbers and put them in folders according to those numbers in the data room. So I learned a lot about their organization and how they look at the world, and what else was I going to find when I actually got in the business. So they did a great job with that, and they did a really good job communicating to me what they didn't have, and they didn't have a lot of things. And I think, again, like you said, they're two younger professionals. This is their first formal agency. um, Rapid growth, fast growing hip design firm out of the San Francisco Bay Area. Some stuff just wasn't important to them. And I'm sure that's the way it is for many business owners. They're like, oh, we didn't quite have this together, and we didn't really worry about that. And like, now you're asking me for this stuff. We've never done it. We don't have it. And so there's a lot of stuff that was important that we didn't have. And we just have to be like, well, we're going to indemnify each other on this. And we're, put provisions in the contract that if this comes up, here's who's responsible for it. One of those examples is taxes. So there's some unsettled tax matters that were still coming up, and because I was doing buying the whole company, we had to be like, who's responsible for these taxes if something comes up before or after. And so that was an area where it wasn't as buttoned up as we'd like in due diligence, but we made it work. We talked through it and we made it work. And what was great about this deal also was with the relationship I have with the sellers. We were committed to finding a fair solution. What is equitable and fair. We I was able to have them buy into this greater vision, right? We are going something bigger and better together in the future. And because that's the guiding light, so many of these little things that if this was the end of the road, right? If they were selling me 100% of the company and this was the deal, this deal would not have gotten done, because those things become so important. But when the strategy where you have programmatic M&A, or you're putting multiple things together, it's about working together to build a much bigger future down the road. And so that, I think that's an important thing to note too, is in this first transaction. I felt like we could both be a little more, give a little more in the negotiation, because what really matters is where we're going in 3 to 5
Yeah,
years. That's
yeah,
the big.
the shared vision, and when you hear about successful deals where the sellers don't have seller's remorse or the buyers don't have buyer's remorse, it's when the shared vision of the future is constructed in a fair and equitable way
Yeah.
that balances uncertainty and risk by all parties. And that's very challenging because the vast majority of deals that are shared publicly are these big transactions or lots of cash and people walk away, or the people were very unhappy through integrations and they left shortly after. There's just this pendulum swing of range in regards to experience, but the vast majority of deals are mergers, companies coming together, shared vision, and trying to take the hill together. And that's what you got to. I know we're going to be running out of time here, so just uh, kind of bookend the story. What was the close like? So purchase agreement and sign and close. You got the deal done.
Um, Yeah, we finally got the deal done. We all met out here in Palm Springs for a strategy day. We had dinner together and shared a bottle of champagne. Um, it was an incredible day uh to get the deal done, to sign everything on the dotted line. And one other nuance to this too is you also have to negotiate employment agreements. Right. So that was one other thing that had to happen in order for this to close. These two founders who had worked for themselves, been the king of the castle, the top of the heap for in their entire 6-year career, now had an employment agreement and a boss. And I'm a very empowerment led boss. I believe in that kind of a approach to life. So it wasn't a big shift, but it's a shift, and that's something significant. I think that's something that you can't underestimate that either. That that dynamic materially changes, and it's a giant change for especially a lot of these high performing entrepreneurs. So um, for us, it worked well. We got the deal done, and we started building this bigger future together. um,
Wonderful.
yeah.
Garrett, I've watched you throughout the journey, and congratulations on your development and on building out a vision for Born and Bred and having this platform that if you're listening to this and you're curious about what Garrett is building, and it sounds like it's something you want to be a part of, Garrett, how can someone reach out to you?
Awesome.
Because assuming you don't reach out to them first.
Yeah, you might already be in one of my sequences. So yeah, look for a message from me in your inbox. Or you can go to my website, garrettmcclure.com. You can also check out bornandbredbrand.com. And my email address is also very simple, garrett@garrettmcclure.com. Look forward to chatting with anybody who might be interested in building something together, or if there's any value I can add, happy to do that.
Thank you, Garrett. And I can't wait to get you back for part 2 on the next acquisition and to hear about the integration and all the wonderful things you're creating. I appreciate you, Garrett. Thank you, my friend.
Same to you, Peter. Thanks for having me.
Big thank you for Garrett for joining us today. And thank you for listening to Agency Acquisitions and Exits. You can find us on Spotify and YouTube. Give us a follow. We post stories of industry experts sharing how they sold or acquired agencies to grow. If you or someone you know should be on the show, leave us a comment, send us an email. We'd love to talk to you and share your story with our listeners. As always, thank you for listening. We appreciate you. Stay safe.